Now, for those preparing to retire soon, the market turmoil could hardly have come at a worse time. Millions of Americans using their retirement accounts, the 401ks, IRA, Roths, and all sorts of things, typically invested in stocks and bonds. At the end of 2024, a survey found those in their early 50s, on average, had nearly $200,000 in their 401k. A retirement account, let's just call it that, the pension, if you will. By the time you get to my age, well, you're up to about $250,000, that's sort of 246,000. Sam's with me. Sam Stovall is Chief Investment Strategist at CFRA Research. Good to see you, Sam. Look, $250,000, assuming you've balanced off, balanced bad, balanced good, you're probably about down 50, maybe between 10 and 15% down. It's really, A, it's shocking, and B, it's how long it's going to take to come back.
Absolutely. Well, when you have that kind of money and every day you're listening to the financial press, you're looking at your account online and realizing that, your retirement is in your own hands rather than, let's say, in a company pension plan, then yes, people get very nervous and are likely to therefore allow their emotions to be their portfolio's worst enemy by selling at the exact wrong time.
And the difficulty is, look, as long as, for the last 30 years, I can remember my late father telling me, and my financial advisor all saying, you move away from risky stocks into more fixed income, blah, blah, blah. But people don't really do that at the level that they should, because over the last 10, 15 years, it's been the stocks that have given you the gains that you're going to need to live on. If you just did that rebalancing, the 40, 40, 20 or whatever, you wouldn't have enough to live on.
Well, and also remember in 2022, both the stock market and the bond market declined by double digits. And as a result, everyone was questioning whether you should have a 60-40 portfolio, 60% stocks, 40% bonds. Would it provide that kind of ballast that you need? And I think that caused investors to move away from that kind of a formula.
And a lot of, yes, you can invest in a companies. I know here at WBD we have sort of one of those schemes where life cycle type cycles. Are you in this group, But the moment you start to try and do it or make decisions, you find yourself in very deep water quite quickly. And I think that it's only when you get to situations like this that the seriousness, the gravity of getting it wrong becomes clear.
Well, but if you do develop a diversified portfolio, in a sense, you're not getting it wrong. Unfortunately, you are going through those periods in time that are fairly regular in terms of losing money in the market in the short term, but you really only lose it when you sell at the wrong time.
I'm guessing that you would say to anybody who doesn't need the money tomorrow, I'm guessing you would say, don't do anything. Don't make as Muhammad Al-Arian, who you'll know, always says, don't make an irreparable mistake.
Exactly. What I try to tell them is to remember how quickly the market gets back to break even. If you saw earlier in today's trading, the market was up 8% in a very, very short period of time. Investors are opportunists. So the interesting thing is that looking at all declines of up to 20% since World War II, the market got back to break even in an average of only 4 months.
What do you think that the market's looking for at the moment, besides certainty? What is that element of certainty? It's not just the president saying, I'm going to postpone the tariffs. That's not certain, because he could change his mind the next day.
Exactly. Well, this is a manufactured correction, meaning it occurred because the president decided to come up with tariffs and initiate a trade war. So once we can get this concessions out of trading partners, and the president then says, okay, well, these are the countries that are not going to be experiencing tariffs above 10% or whatever, then the market can start to work its way higher. But you're right, it's simply going to fluctuate if uncertainty is still at the controls.
And I'm grateful that you were at the controls to come and talk to us today. Good to see you, Sam. Thank you very much indeed.